The Fed's hawkish tone is sending stocks lower this morning. So what does this mean for investors? Yahoo Finance's Blikre joins us from the floor of the New York Stock Exchange. Hey, Jared.
Hey there, Brad. Looking a little bit negative on the Wi-Fi Interactive here. We're seeing all sectors, all 11 sectors in the red. Best performing are the defensive ones, healthcare, that's XLV and XLP, which is staples. Looks like real estate, which was the best performer yesterday, taking a back seat today. I'm going to move on to the bond market in a second. First, I want to cover some patterns and people are noticing on Twitter, not threads just yet, but on the NASDAQ composite, potentially seeing a double top here. This would be on a short-term basis. By the way, double top not confirmed until you breach the neckline, so stocks could, or the index could very well do something like that. Any number of possible permutations, but just want to point out what people are noticing. Also seeing the same thing in the S&P 500. But I want to talk about positioning and also sentiment. So if we take a look at what's happening in the VIX right now, we had been seeing a lot of complacency. These lows right here that we saw during June, those were some of the lowest level we've seen in years. And now volatility picking back up a little bit as stocks turn over just a little bit. Protection is still cheap, and protection is best bought when it is cheap, not when you need it. When you need it, it's usually much more expensive. You're looking at something north of 20 in here. Also taking a look at the VIX of the VIX as a leading indicator, that has ticked up here. And then finally, the bond market volatility indicator, ICE B of A move index. We're still seeing that fairly depressed here. However, I did say there was something interesting going on in the bond market. 10-year T-note yield exploded to the upside yesterday. This is the highest price, highest level, I should say, in months, back above the 4% level in the 10-year. And I think we're going to find out, does higher for longer really mean the bullishness that everybody has been taking the market to believe? I think when you take into consideration all the complacency and the gains that we've seen so far, market participants should be on alert here. I want to close with this. This has to do with sentiment, and this is the CNN's Fear and Greed Index, along with S&P 500 rolling 12-month returns. The cyan line is the greed index, and you can see it's the highest that we've seen, goes all the way back to about mid-year 2021, and then we have the S&P 500. So when this peaks, when the Fear and Greed Index peaks, we do tend to see a peak in the S&P 500. How long it lasts, we don't know, but things are pointing towards a bit of a pullback here, guys.
All right, not just pointing, we are already in a pullback, it seems. Professor Jared, thank you so much, as usual.